Imagine a financial asset whose supply is capped, whose technology is evolving, and whose narrative is shifting from speculative hype to institutional adoption. That asset is Bitcoin. Many people ask, why now? Why might Bitcoin, BTC, be about to explode upward? In this talk, I'll walk through the real reason and how multiple structural forces are aligning to create a potential breakout. The scarcity foundation. To understand the coming move, we first must revisit Bitcoin's core design. Bitcoin was created with a hard cap. There will ever only be 21 million coins. Further, the protocol enforces halving events. Roughly every 4 years, a reward to miners is cut in half, reducing the rate of new supply. What this means, supply is finite and new issuance is decreasing over time. In normal economics, when supply is constrained and demand increases, or even holds steady, price must adjust upward. That's the simple model. First, the timing of demand and supply shift matters. A halving event or supply shock anticipation can trigger speculation. Historically, Bitcoin's past halving events preceded major price run-ups. Analysts often point to the supply shock, fewer new coins entering the market, as a key driver. Therefore, one leg of why Bitcoin could explode is the scarcity of supply constraint mechanism being activated or about to be activated. Institutional adoption and legitimacy entering a new phase. The second major leg is about demand, and in particular institutional demand, which is different from retail hype. In the early days, Bitcoin's price swings were driven mostly by retail speculators and hype cycles. But now we're seeing real institutional money, corporate treasury allocations, ETFs, large funds entering the space. For example, companies deliberately adding Bitcoin to their balance sheets as a hedge or strategic asset. Moreover, regulatory developments, or at least growing clarity, are making Bitcoin more investable in regulated channels, such as spot Bitcoin ETFs. Why does this matter? Because institutional capital tends to move in larger increments, is more sticky, less likely to flip quickly, and once committed, less likely to flee. The narrative is shifting from if to when for mainstream acceptance. The macroeconomic backdrop. Thirdly, we must understand the macro environment in which Bitcoin is operating. A few key trends. Low or lowering interest rates and abundant liquidity tend to drive investors toward riskier or alternative assets. Some analysts link upcoming potential rate cuts by the Federal Reserve with bullish sentiment for Bitcoin. Weakening confidence in fiat currencies, e.g., concerns about inflation or monetary debasement, make alternative stores of value more attractive. Bitcoin is sometimes described as digital gold. The strength or weakness of the US dollar matters. A weaker dollar often correlates with higher Bitcoin price, though not always. Combined, the macro environment may be shifting in Bitcoin's favor. More liquidity, more risk appetite, more search for alternative assets, all potential tailwinds for an asset like Bitcoin. Supply-demand dynamics in motion. Now, let's get more concrete about how supply-demand dynamics are playing out right now. Supply side. New issuance of Bitcoin is falling via halving, and the circulating supply is increasingly held by large entities, which reduces the available float for trading. According to one commentary, every corporate buyer permanently removes coins from circulating supply. This is mathematics, not speculation. When coins are removed from the liquid market, any given demand shock has bigger impact. Demand side, institutional flows, treasury buys, regulatory vehicles, ETFs are increasing demand. Also, adoption by companies or services is growing. When you combine a shrinking supply window with growing, committed demand, the stage is set for upward pressure. An analogy, imagine if global oil production suddenly dropped by 10% while demand held steady. Price would likely spike. Bitcoin may not map perfectly to commodities, but the logic of supply shock plus latent demand remains valid. Why now may be different, and why explosion may be in the cards. Why is now potentially the turning point, rather than just another cycle? A few reasons. Institutional maturity. The infrastructure, custody, regulation, ETFs is more advanced now than in previous cycles. That reduces barriers to large-scale investment. Scarcity stacking in progress. More companies and funds are stacking Bitcoin, storing it rather than trading it. That reduces float and increases structural demand. Macro crosswinds. With global uncertainty, inflation concerns, and monetary policy easing, the environment may favor Bitcoin more than prior cycles. Narrative shift. From speculative internet money to an asset class in its own right, which broadens potential investor pool. If all these align, then the explosion isn't purely speculative hype. It's an outcome of structural alignment. As one article put it, with only 21 million Bitcoin that will ever exist, corporate adoption creates unprecedented demand pressure. This kind of commentary suggests a deeper, more durable bull case than simple momentum trading. Risks and caveats must include, of course, it would be irresponsible to ignore risks. A potential explosion does not mean guaranteed upward trajectory without hiccups. Some of the key risks. Regulation. Governments could impose restrictions, taxation, or outright bans. The regulatory future is still murky. Investopedia. Technical risks. While Bitcoin is secure, network scaling issues, or mining economics, or external shocks, quantum computing, etc., could change the landscape. Overvaluation psychology. Price may already reflect a lot of this expectation, meaning a lot of risk is priced in. Some academic work warns of bubble dynamics in crypto. Macro shocks. If interest rates stay high, risk-off sentiment dominates, or a major financial crisis hits, Bitcoin could falter. Liquidity and market mechanics. Even if demand is strong, if supply is illiquid, the market can still be volatile and subject to spikes in both directions. Hence, the explosion scenario is plausible, but the path may be messy, volatile, and require patience. What explosion might look like in timing considerations. What does explode mean? It could mean large percentage gains over a relatively short period, e.g., doubling or more, or setting new all-time highs. Some price prediction commentary suggests targets like $120,000 plus for Bitcoin in the near term, late 2025, under bullish assumptions. Timing. It's unlikely to happen overnight in a smooth fashion. Historically, Bitcoin surges are preceded by accumulations, then breakout phases, followed by volatile runs. If the supply-demand alignment is in place now, we might see the early phase of the move. Perhaps the major acceleration comes as institutional flows become more visible. If you liked our video, please hit the like button and subscribe to our YouTube channel.